Let's welcome in Jayesh Mehta, Country Treasurer at Bank of America, Merrill Lynch. Jayesh, thank you so much for taking out time for us. Could you just tell us about the recent complacency that you've seen in markets all across? IVs are very, very low. Everybody is just talking about being bullish. What signals does it give you?
No, I think it's purely liquidity and also, the expectation of rate hike and reflation trades and things in US, which was there is, of course, the rate hike will continue, but data is still not giving that great comfort, and that's where bonds are not really moving higher. So I think bonds continue to be kind of softest. India would be a different situation. India, again, slowly, it's not moving sharply. It is going to be range bound right now. And slowly it's inching up, mainly because of, your change of benchmark, which may happen in a month or so. But beyond that, it's not going to be moving either way. So from that perspective, it's mainly liquidity-driven situation.
Right. Whenever we talk about liquidity-driven situation, it doesn't mean that it's going to go away in a hurry as well. There are still smart people who are investing into different bonds, different equities across. So it's not that it's going to go away in a hurry.
Yeah, it does not, right? So it's like it is definitely liquidity driven. Very difficult to think what is the way one can place it, but yes, I would not say people are complacent. I think people are more of they sell and then the market's still not falling, they come back again. So it's just more of that situation which is happening, right? So I really don't think at least immediately we can see anything changing dramatically, and that's what the people are feeling complacent about, that we don't see that liquidity going away globally or locally so fast or easily. So that's, I think, the main situation. But apart from that, of course, all emerging markets doing well, including India, and US bond yields are soft, and that will help till the time US bond yields are going to be soft.
Right. In terms of global risk, do you think they are increasing day by day as market levels, as investors are turning bullish? Nobody is expecting any major change across?
Yeah, as of right now, one of the things people were thinking that, if the tax plans and the other Trump trade starts re-picking up again, and then it becomes strong dollar, and which still can happen, right? So we don't know, but people are saying wait and watch. So it's like, November, December, people went completely dollar strengthening and all that, then they reversed it off. After the France, people became, okay, Eurozone is fine. And that's when now maybe we have to see next 1 or 2 months if we don't really see the Trump trade playing out in US, and then again it will be a completely different situation for emerging market.
Right. In terms of shift or the focus, you think has shifted from central bankers to what's happening on the policy side? Is that something which has happened now? So elections have become much more important. Even smaller elections have become much more important versus central bankers' meets?
That has become, but I think it is still central bank has given. So it's like, large risk events are being highlighted, and that's when you had Brexit and Trump and, of course, France now. The France thing, yes, it didn't matter, but there was a lot of focus on it, and there was relief then. But again, if the expected result would not have come, it would be, there would have been a sell-off, but very, my feeling is it would be a very short-lived sell-off, just like what we saw in Brexit. But yes, focus is like when you don't have any other points to discuss, small points get very, broadly highlighted.
Do you think that commodity prices, the way they are falling or where they have started to fall again, is a big risk if it falls further?
That is a big risk, because then people will start thinking that therefore there's no demand, and that will have impact on the equity market, both U.S. and local emerging markets. That will definitely have impact on growth assessment. But while we are looking at triggers, because there's nothing really to point out to, so people are looking at every small thing. It's not just the small election. People are looking at every small thing. I personally feel, commodities, particularly oil, does not look like going up in a hurry. But of course, there are a lot of forecasts which is talking about oil going much higher, faster. I think even if it goes maybe in short term, but long term, as we move, why people talk about automated cars, the immediate fact is going to be electric cars. So there is a lot of replacement of fuel which is happening globally, and alternative power sources also. That also is a factor apart from the shale in US.
Right. As far as bond yields in India are concerned, do you think they are still attractive for a debt investors? There is always this talk that next year similar amount of money cannot come, but for the last 3 years, the FII inflow into debt has just increased.
No, definitely, it is still attractive. I think, you see, when we put FPI as a category, as a broad category, there are, we brush it up with one set of investors as FPI, but I would think FPI, I would split it up in three, right? You have long-term guys, you have arbitrage guys, and you have pure trader guys. So the pure trader guys are definitely waiting right now at this juncture. Naturally, they feel that maybe they can get bonds at 5-10 basis point higher, 15 basis point higher. So they're going to wait for that. And as of right now, markets, most of the market is not really expecting any rate cut. In fact, some of them are really expecting rate hike. So in that situation, if there is no major capital gains happening, the trader kind of guys are really out. The arbitrage and the carry guys definitely are in. Even if you look at short-end bonds, pretty attractive at 680, 690. Even if it goes by 10 basis point higher, it's a very positive carry for the foreigners, especially when the forwards are so low. It's like 1.5% positive carry. And even if you look at our own inflation projection at 7%, even if we say we are at 4.5%, 5%, it is still giving you great real pickup. So from a longer term, medium term carry perspective, if you're not looking at capital gains, that's pretty good to hold. That's where we see demand coming in. Long term investors, some of them have been buying regularly, but I think the guys who are buying monthly basis, in fact, their own funds price has shrunk, mainly oil countries. So they have kind of reduced it, but they have not stopped it completely. But they've kind of reduced it. So yes, that flows are there. But as you see, when you see chunky, large flows coming in, that's normally either a very long-term investor coming in, or lots of trader coming in together. So that's why you're not seeing. We saw that chunky flows in March. February, March. In April, we didn't see much chunky flow. Even right now, what we are seeing is daily there is some small buying, but typically, again, is on the short end of the curve.
Right. Just as far as, FII flows are concerned,
as I said,
next year, you think FII flows into debt can replicate what they have done till now?
No, absolutely. I think even today, it is a question of time. I think it's a question of next 1-2 months. I would say that this next 1 month or 1.5 months is where we see what happened to the U.S. after the next Fed policy, whether it's further rate hike, whether it's Trump trades playing out, other places reflation trades happening. If that's not happening, there is no reason why we should expect rate hike in India. But as of right now, a lot of people, more than 50%, are really expecting, especially after the last monetary policy minutes, people have gone, some of them really started looking at rate hike. So that's what is the situation. But whether it's foreign or local investors, on the trading type, they would think similarly, right? So the trading type guys would think similarly. Investors locally are also buying, but of course, simultaneously, we still have supply. So I think while you don't have clarity on what's the next 2 months look like, but you have a weekly supply coming in, market not moving anywhere. It moves 5 basis point higher, 3 basis point lower, maybe again moves 5 basis point higher, but slowly drifting higher, which should get directional move somewhere only in mid June or so.
Right. Jayesh, thank you so much for taking out time for us. Always good to get a perspective from you. That's a view coming in from Bank of America, Merrill Lynch, that FII flows can continue to rise. They may not rise significantly, but at least they can be stable at these levels.